Well, Snap getting a big pop on its first day of trading. How much higher can it go from here? Welcome to Trading Nation. I'm Courtney Reagan. I'm joined by David Seaburg, head of equity sales trading at Cowen and Company. Wow, what a day, what a morning. Took a while for it to open, but it finally got there for Snap. So Dave, what do you see ahead for this stock? You think it's hot or not?
No, actually, Courtney, this has been, and I think it was really designed to really trade well today. The way it was structured from the allocation, I think it was just really poised to trade well, given the fact top 25 accounts got 75% of the deal. There was a lockup structure, on a certain amount of shares. Retail really didn't get much of an allocation, so you had the retail interest sort of come in and take the stock higher. So, really kind of designed to do well. But going forward, when you think about this as a retail investor at home, should I jump in at these levels, given the fact it was priced at 17, now trading at 25? The key metrics when you're really valuing one of these companies is user growth and monetization. And, frankly, user growth, well, let's dissect these a little bit. User growth has really been decelerating. When you look at it since second quarter of 2016, when they added 21 million daily active users worldwide, Q3 they printed or added 10 million daily active users worldwide, and then in the fourth quarter only added 5 million. So you're seeing a deceleration in user growth. So it's not coincidence, in my opinion, but that's really around the time you saw the decline there when Facebook started to add, when they added their own feature or their competitive sort of brand, Stories, which basically gained roughly 150 million users in 6 months after their launch. That's what they announced they had. So user growth is a key metric. All eyes are going to be at that because basically right now when you look at a stock from a monetization perspective, I kind of look at that leg and say it's really priced in. Just do some back-of-the-envelope math on this story. When you look at monetization, it's measured in, RPUs, revenue per user. And I think the street right now is assuming that they're going to be able to get $6 of revenue per user in 2017, and that would equate to roughly $1.1 billion in revenue. If you look at a Twitter or a Facebook as a comp, they're printing roughly $16 in total RPUs, Twitter is, and Facebook's around 23. So again, you back of the envelope math it and look at it and say, let's make the assumption that Snapchat can even get to the likes of Twitter of $16 in RPUs. That's roughly $2.5 billion. At $25, that's suggesting it's trading at 13 times revenue. Facebook's trading at 9 times revenue. Twitter's trading at 4 times revenue. So at $25, in my opinion, this stock is completely priced in the monetization side of the equation. The only real upside trajectory for the stock going forward is the fact that they can gain traction on the user growth from a user growth perspective. And look, it's going to be only told through their quarterly reports, which we're going to have to wait and see on. So I kind of think that at these levels, it's really pricing in a best case scenario. I wouldn't be jumping in head first here to own the stock.
And certainly not all social networks are created equal. You had LinkedIn, Twitter, Facebook all go public and all have very different recent histories, at least. Facebook is a stock that many want to own, and they really did a nice job monetizing mobile, especially for the ads. But this is just not a story you see playing out for Snap.
Well, no, look, let's look at the difference, right? Facebook really succeeded over and has, 1.8 billion worldwide users. It's an amazing story, but think about the way they sort of work their story versus a Twitter. Twitter really has one bucket, right? To really kind of monetize or grow their user base. Facebook was very smart the way they went after it, and they got the Instagram of the world. That was probably their best acquisition. They actually went after Snapchat. They made, a $3 billion bid for them a few years back and, didn't succeed in that. Maybe it was a low ball bid, I get it, but the fact is, you don't think that they're going to come after this business, head first with guns a-blazing? They're absolutely going to. They're showing that they're going to be successful in doing that. They've got their user growth backing to support them. So I look at this and say, watch out, Snapchat. Facebook's nipping at your heels. They've got a mass following. The only home court advantage that Snapchat has is a younger user base, but I think the younger user base is much more fickle than the older user base. The older user base is much more sticky. I think Facebook owns them, and they're going to continue to.
That is true. I think Facebook owns that older user base. But I was at a concert last night, and everybody around me was snapping.
Thanks for the invite to the concert, for crying out loud.
Hey, whenever you want to go to a country concert, you can come with me. That's my kind of jams. Thanks so much, David Seaburg from Cowen and Company. Appreciate you joining us, and we hear your warning loud and clear on Snap. Thank you all for watching Trading Nation. I'm Courtney Reagan.
Hey there, thanks for checking out CNBC on YouTube. Be sure to subscribe to stay up to date on all of the day's biggest stories. You can also click on any of the videos around me to watch the latest from CNBC. Thanks for watching.